This video will walk you through creating a statement of cash flows up through the operating activity section using the indirect method. This problem has been provided for you, and hopefully you've had a chance to work through it. If not, I would suggest you take a minute and work through the problem prior to watching the video. So here's the data that we're given. There are a couple of all of this information is extremely important in terms of the dollar amounts and when the values are given for these asset and liability accounts. Plus there's some data buried up here at the top where they're telling us the net income reported for the year was $132 and depreciation was $21,800. We need to use all of these numbers in creating the operating section for the statement of cash flows. So what I've done is I've pulled all of that data over except for the depreciation and net income, and I've thrown it into this little yellow box here. Plus I've created a little template or outline of the statement of cash flows up through the operating activities so that we can finish the problem. Plus I've also put this little blue matrix down here that I'll talk about later as well. So the statement of cash flows has a proper heading like any financial statement does, and then statement of cash flows always starts with the cash flows from the operating activities, and using the indirect method you always start with net income. And if you refer back to the problem, they told us net income is $132,000. The indirect method of the statement of cash flows starts with net income and reconciles it backwards to tell the user, hey, we had this much profit, but how much cash did we really have coming in or leaving the organization as a result of the operating activities? So next on the operating activities, actually first in terms of reconciling, is this item called depreciation. Depreciation is a non-cash expense. Depreciation was given to us at $21,800. And since depreciation is buried into net income, it made our net income go down when we put in depreciation, so we need to pull it back out because it's a non-cash expense. So we're going to reconcile it out of net income. In other words, we're making our net income figure from here go up by $21,800. After we've taken out depreciation, or actually added it back in, we go and we analyze all of the current assets and the current liabilities for the operating activities, which are listed here. We look for the change between the two, the beginning of the year and the end of the year. Notice I have cash at the top, which I'm not going to do anything with at this point because cash, that's what the whole report focuses on, is reconciling cash. So I'm going to take and I'm going to say here's what I ended with, $37,500 in accounts receivable, and I started the year with $35,600, so I had an increase of $1,900, and I do that for every account. I just find the change, and this last column here gives us the total change in all of these accounts, which is what we're going to use when we're plugging in the statement of cash flows. So we analyze all the current assets. You need to then understand what is accounts receivable. Is a current asset or current liability? So you might need to go back and review just where these accounts lie in terms of current assets or current liabilities. So here's how I use the matrix down here. I'm looking at accounts receivable, and I've already analyzed and I've seen that accounts receivable increases. So if I look at the matrix, it's a current asset. And up here at the top, if it has a plus, that means it increases, which it did. And so if current assets increased, what's located in the box next to which type of account it is tells you what to do on the statement of cash flow. So since it increased, I look down here, it's a current asset, I should subtract it. So I'm going to take this number, the 1900, and I'm going to subtract it on the statement of cash flows. And I just continue down now, working through all of these accounts. Inventory is also a current asset, except for it decreased. So I look at my matrix, current asset decreases, I should add it in to the statement of cash flows. Prepaid expense is also a current asset. It increased, current assets increased, therefore I subtract it. So I am going to subtract this number. Accounts payable is a current liability. Accounts payable increased. Current liability increased, so I need to add it. And the final one is wages payable, which decreased. So it decreased, and it's a current liability, so I subtract it. So that's it for all the current liabilities and current assets. Now I'm just going to do some formatting here on the statement of cash flows. I'm going to take all of those adjustments, add them together, and this tells me that from my net income, if I take all these adjustments and I reconcile all these items out, my net income actually was 132, but I had more cash come into the organization than I had represented in net income. So I add the two together, and this tells me the net cash provided by operating activities was $153,920. Even though net income is only $132,000, my operating activities brought in cash larger than that. And if this number had been negative, you would have subtracted it from net income, so it would have been smaller. You could also start with a net loss, and so these numbers could be positive or negative, but the concepts still stay the same here in terms of how you reconcile backwards. And that brings us to the end of this problem.